Hello everyone, and welcome back to Fun with Fitzy. We are still on 9.1, however this is part 2. We are adjusting for supplies. This is fairly easy, but we're going to break all of the adjustments down into different videos for you. So, when supplies are purchased, as you know we discussed this in the last video, plus we've been doing this all year, we debit supplies. When you buy supplies, debit supplies. However, as the supplies are used up, which is usually daily, nothing is done about it. Usually, the supplies just go, but no accounting entries are made. But you would think it would make sense that as you use up supplies, we should credit supplies because they're going down. During the accounting period, the balance of the supplies account then represents the balance at the beginning of the period, or the balance of what we purchased. So if we had, let's say, $1,000 in the supplies account, that represents all the supplies that we bought or the supplies we had on hand at the beginning. It doesn't necessarily represent what we actually have because people could have been using them up as we go along. So there is another account, it's called the supplies expense. We haven't used the supplies expense yet because we haven't needed to. And all throughout the fiscal period, the supply expense account is zero, and as you know, expenses have a zero balance, right? So what we need to do at the end of the fiscal period is count. So when we say do an inventory, we mean count what we have. So we're going to do a supplies inventory. We're going to count what we have on hand to see how much we used up. And we're going to calculate the cost of supplies. And really what we're after is how much supplies we use, because that is really the expense that we're looking to put into our income statement. Okay, so let's do an example. As you see in our T account here, on December 31st, our supplies balance is $7,900. And as I mentioned earlier, our supplies expense is zero, because we haven't done an adjustment for supplies yet. So assume at the end of the fiscal period on December 31st, we did a supplies inventory and we realized there was $1,386 worth of supplies left. What that means is that's the balance now we have in supplies. So in order to figure out how much we used up, we're going to take the 7,900 and we're going to subtract the 1,386, and we're going to get that magic number, what we used. Okay, which is, as you see here, $6,514. So the journal entry for this is debit supplies expense, $6,514, because that's what we used up. It's now an expense to us. And we have to credit our supplies because that's, if it's used up, our supplies have gone down. So once you post this journal entry into the ledger, this is what it would look like. You're going to credit supplies, debit supplies expense, and then you're going to get your final balances. So our final balance, as we saw here, is what we counted in our inventory, which is the balance in our supplies account, which is what we wanted to see. But this is the adjusting entry that we're after. Okay, let's try it on your own. I want you to pause the video and try this, and then in a minute we'll work together on it and see how you're doing. So the balance in the supplies account is $10,000. So what I would do is I would draw myself a little picture. Supplies, $10,000. An inventory count revealed $4,000 worth of supplies left. So I know this is what I want in my supplies account as my balance, because that's what we have left. So how do I figure out how much we used? This is what you need to do right now. So pause the video, calculate it, and prepare the adjusting entry. Okay, welcome back. In order to keep moving, we're going to take that $10,000 minus the $4,000 of what we have left, and therefore we must have used $6,000. So 10,000 minus 6,000 equals 4,000, which is what we want. So the adjusting entry then, adjusting entries are always at the end of the year. So we're going to go December 31st. We're going to go supplies expense And it's always how much you used. We used $6,000, and we're going to credit supplies. And your explanation is going to be adjustment for supplies. Okay, so by now you should be able to calculate adjustments for supplies. Just keep in mind it's always what you used that you're after. Sometimes the textbook will tell you right away how much you used. That's the number. But most often you will calculate how much you used by taking what you had in your account, subtracting what you have left that you get from your inventory. And prepare the adjusting journal entry for supplies. So prepare the adjustment. It's always going to be debit supplies expense and credit supplies by the amount you used. This is what you used up. Okay?